London is home to some of the world's most recognised buildings, and the skyscrapers that mark the city's financial district are increasingly coming under Asian ownership. Chinese and Hong Kong investment in London's commercial real estate has tripled this year, now making up a third of the market.
The focal point of commercial has really gathered momentum in the last 3 or 4 years, and I think post-referendum has been the real driver because of sterling. And that's where we've seen the major increase in terms of the amount of commercial real estate being bought by Hong Kong investors.
According to commercial real estate services firm CBRE, Chinese investors spent $5 billion on commercial property in the first 6 months of this year. This building is officially known as 20 Fenchurch Street, but it's better known as the Walkie-Talkie. It was just bought by the Hong Kong food conglomerate Lee Kum Kee for $1.65 billion. That's a new record for an office building in Britain. And this is the other major purchase of the year, the Leadenhall building. It goes by the nickname the Cheese Grater. The Hong Kong property developer CC Land bought it for $1.4 billion back in March. The Cheese Grater purchase wasn't a one-off for the company, which is also snapping up residential property. Along with fellow Chinese developer R&F Properties, it's just acquired a $600 million plot of land along the Thames, rezoned for luxury apartments. The property investment platform Brickfest says even Brexit isn't putting investors off. The fall in the value of the pound since last year's Brexit vote has made investing in the UK more attractive. And that's equally true for residential property. Soaring prices means many local buyers are priced out, but foreign buyers continue to pour in.
The majority of the capital we've seen invested in London this year has been Hong Kong domiciled. The reality is that since capital controls were put in place in November 2016, we've seen very limited mainland Chinese capital come to the UK.
I think many Hong Kong Chinese are looking for a safe haven for their money, and London property is still perceived to be a safe haven, and it has the added bonus now of being much cheaper for Chinese and Hong Kong Chinese investors, because the Hong Kong dollar is linked to the US currency, and of course the pound has fallen by about 15% over the last year against that currency.
But it's not just Hong Kong that's investing in the London property scene.
This is not just an Asian phenomenon. We're seeing the same thing happening in the Middle East, where we've seen some pretty significant transactions being bought by private Middle Eastern capital as well.
All this activity comes at a time when vacancy rates in London are actually increasing, amid uncertainty over the Brexit negotiations. And most analysts expect rents to fall over the next 3 years. But London offices are still considered less risky than development projects, and a relatively safe way of diversifying into other markets. Shaun Hassett in London for TRT World.